Alrighty, ladies and gentlemen, my name is Zack Brittain with Phipps, Brittain Real Estate, Cloud Realty Brokerage here in Waterloo Region, and this is the PBRE show. Today, I am joined by a lovely guest, Brandon Haskins, family man, athlete, hunter, lover of racing, which I wasn't on board with until recently.
Endurance racing.
I was more going like NASCAR racing, but
well, okay, yeah, there's that in there too.
Mortgage broker, friend, my friend and yours.
Absolutely.
Welcome to the show.
Thank you. Thanks for having me.
Yeah. So I gave you more prep than our previous guest.
Yeah.
First guest in, I gave nothing. Yeah. This, we're going to go through a little bit about yourself. I'm going to hit you with some quick questions.
Yep.
Then we're going to get into like real estate specific stuff, your business specific stuff, and then a little bit of market, a little bit of news, a little bit of what we think's going on.
Yeah.
Give the people some goodies before they head out if they want to know what's going on in your world and kind of what's helped you. But before we get into anything, give us the quick and dirty. Who are you? What do you do?
Yep. So I am a mortgage broker in Waterloo. I've been an agent for about 5 years now.
Full time?
Full time. Started out in the corporate world in banking, TD.
TD, baby.
Shut out. And then got an offer to get into the mortgage industry right out of college.
Really?
Yeah.
Did you know you were going to get into it at all?
Nope. Not at all. I had totally planned to be the FSR, like investments, mortgages, whatever.
We were going to be an advisor.
Work at the bank, kind of thing. But you had to be a jack of all trades and a master of none, which didn't really sit well with me.
Yeah, you were like, I'd rather just like, I'm interested in this, I'll just do that.
Yeah.
Okay.
So then got the offer. It was interesting. Knew nothing about mortgages. We didn't have a house at the time. Like I was still finishing college and about to get married. So I was like, what? Let's do it.
So literally like basically first career.
Okay. Worked in there for a little bit, got my license, and we had our first kid. We bought a house, had our first kid. When I got my license, I was only 25. No experience.
I was 25, 26 when I got a business.
Just wanted to get more life experience before I started the career. So jumped into the corporate world, hated it, but learned a lot of lessons. And it was also my launching pad. Yeah. Those were my first clients.
True.
Were the people I worked with.
True. So did you just go back to them and were like, hey, I'm in?
Yeah. As soon as I made the decision, I was like, okay, mortgages is where I want to be. I'm going to go into mortgages. So I just started talking to people at work. Yeah. Making sure they knew I was licensed, I could do it. I would spend nights and weekends
while you're working corporate,
relearning the mortgage industry, because I was out of it for 2 years and so much changes. Month by month, so much changes.
That's got to be my biggest beef with your industry. It's just stuff just changes way too quick.
Always moving, and real estate changes so much. I mean,
more so than people think.
Yeah, and the lenders are still old and stuffy. They don't keep up.
That's true.
They're always behind.
That's true. Okay, we're going to get more into the mortgage game and your business. We're going to do the gauntlet first.
Okay.
I'm firing random ass questions.
Yep.
We're going to go quick like this or that kind of answers.
All
right. Are you a morning person?
Yes. I got to train.
Ew, really?
Got to train.
First thing you think of
5 a.m. club. Yeah. And then get coffee and pre-morning routine, stretches, activation.
Okay, so that was the next one, coffee or tea?
Oh, coffee.
Really? How many a day? How many a day?
I have cut back huge.
Really?
Yes, but I've also increased my energy drink. That is my guilty pleasure.
Really?
I love energy drinks.
Okay. Tacos or burgers?
Burgers.
Calls or texts?
Text.
Cats or dogs?
Dogs.
Winter or summer?
Summer all the way. Hello, Texas.
Yeah. Best vacation spot?
Well, we've only ever really traveled to Florida and Disney, so we don't really have much to compare.
Is Disney lit?
I would say it's more fun when we didn't have kids.
What?
Yes. Well, you get the sugar meltdown.
Oh, is that real?
Oh, yeah.
Okay. Because Michelle's been asking me to go to Disney for a decade, and I'm just like, nah. Now that we got a baby, she's like, we're definitely taking her.
Yeah. Well, I mean, when they're babies,
5, 6, probably.
Fine. But as soon as they can start walking, they see those candy stores, and then you push them all day in that heat. They want that candy and then just like sugar crash.
You're a sucker for your kids too.
Yeah.
You told me.
Oh yeah.
All right. Well, then I was good. That cancels the last question because I was gonna say worst vacation spot.
We
also Disney.
No, actually, we did try one other vacation on March break this year, and it was the vacation from hell. We went to a water park in Sandusky, Ohio.
And it wasn't what? Really? I feel like that'd be lit.
Well, you would think, but we got a flat tire crossing the border into Detroit. We had 3 different hotel rooms within the first 5 hours of being there. They just like the door was broken. One smelled like shit. Like we just kept getting moved around. The first one we were at like the other side of the resort and with 2 kids.
Yeah, you're just like, guys, this isn't what we paid for.
It's not going to work out. It was so bad that the after the first night we woke up and Eli, our oldest, was like, is it time to move hotel rooms again? And then we got home. I got sick too. I had an allergic reaction. I got sick. I'm not allergic to anything, so I have no idea what caused it. And then we got home, and because we hadn't been home, our Nest shut off. Like the thermometer, it was 58 degrees in our house when we got home at 11 o'clock at night.
Love to be home with 2 kids.
Call
just
the parents. We got to come over while our house heats up for a few hours. It just sucked. It sucked all around. The resort was great.
Don't you love family vacations?
It's not a knock on the resort.
Yeah.
It was just like
I was just about to bury
after
that.
bad thing after bad thing. And it was just like, this is what happens when you don't go to Disney.
Nightmare. That's true. No free ads, Disney. I'm going to expect a check in the mail. All right. If you could play one album in the car or the truck for the next year, what would it be?
I'm not stuck to one.
You got to pick one.
I don't know. I can't.
I'll let you off easy.
One
podcast. Because you said you've been listening to a lot of podcasts.
Yeah.
You're picking one for the rest of the year.
2 bears, 1 cave all day long.
Done. What's the worst job you've ever had?
My corporate job.
All right, we'll keep that on the wraps.
Yeah.
Favorite sports team?
I am a Leafs fan.
Stop. Next. Favorite lunch spot?
Probably Bauer Kitchen.
Okay. If you could have any superpower, what would it be?
Read other people's minds.
That would be pretty good. Do you have any hidden talents?
That
most people wouldn't know about.
I don't know if it's really a talent, but I can go into the pain cave in endurance racing, and I love it.
The pain cave is there.
Yeah. Like the amount of, I haven't done a ton of races, but the ones I have, I've gone to like places where you're blacked out. You don't even remember parts of the race.
Yeah.
And I love it.
And that's not a suit that's uncomfortable, but not unmanageable.
It's uncomfortable, but it also teaches you how to deal with adversity. And in this business, you're constantly faced with it, right?
That's all it is, man.
Yeah.
All right. What's one pet peeve of yours? One thing that just like irrationally makes you upset.
In business or?
Nah, it can be personal. Your wife's in the room. Be careful.
Yeah. I'm sure she has a lot more pet peeves than
wow.
I have. Yeah.
All right, playing it safe.
Okay, my biggest pet peeve is I hate a dirty car.
Really? You have 2 little kids and you probably work in your car half the time.
They're spotless. Right now,
Ew,
they're a
dude,
little.
mine's never clean.
We've done a couple day trips the last few weekends, but I will spend all day Saturday fully detailing both vehicles.
Good for you. I'm proud of you.
Like shampoo carpet, vacuum. Like it looks like it just went to a detail shop.
After my 4-year lease was up on my first car, I literally had 1 car wash, never clean the inside. Yeah. Michelle got it detailed for me before I turned it back.
We never travel without me fully detailing a car. Dude. And if that means I'm getting up at 5 a.m. to detail the car because we're leaving at 8, we're getting up. That car has to be detailed before we go anywhere.
Good for you. All right. Favorite thing about living in Waterloo Region?
I've lived in a number of places, including the States. I like it because like family's here. My family's here. A lot of friends here. And it's just, this is where I was born. So I grew up for a little bit. Yeah. Moved to the States and came back. So.
Yep. All right. If you weren't doing what you're doing now, what would you do for work?
Well, I'd probably would have worked a little bit harder if I knew about endurance sports.
Yeah.
Early on, I didn't get into it till a couple of years ago, but I would have spent a lot more time running, swimming, biking.
Getting into that.
Yeah, to try and make a career out of it.
Cool. Good for you. All right. Let us know how Brandon did in the comments. you mentioned you're doing mortgages now.
Mm-hmm.
What you did a little bit of corporate before.
Yep.
How did you what was kind of like I'm going to get started in mortgages? What's like because you said you got an offer. Did somebody just be like, hey, I think you'd be good at this. Here, come work for me.
Yeah. So it wasn't on the agent side of the business. But what intrigued me on the agent side of the business, and just kind of being in the industry, was the schedule flexibility.
Oh, okay.
And being in control of your own destiny.
You wanted that?
I wanted that.
Oh, okay. Because some people will get into that, like family business, or like friend convinces them, like, hey, get involved. We're making good money here.
Yeah.
But like the variance or the, the responsibility of that control isn't for them. I know a lot of people that are like, yeah, they want things in life, but they're not willing to give up the steady 9 to 5 because they're like, when I'm done work, I'm done work. And I like that.
Yeah. Yeah. And for sure, like, there's a lot of nights, a lot of weekends where I'm working, but if it's Friday afternoon, 3:00, and I want to go pick up my kid from school, I can.
Yeah.
This job allows for that.
And that alone is worth it.
If we want to go on vacation, I can go on vacation, no problem, and nobody has to know I'm gone.
Yep.
Right? We can still work, can work anywhere in the world. So having that flexibility to be moving and shaking around.
Yeah.
If I want to train for an Ironman or a half Ironman, I have that flexibility to get those long workouts in.
Yeah.
Whereas if you're 9 to 5, like, you're expected to be somewhere at a certain time and you check out and whatever. I don't like being chained to one place. I like to be on the move.
It's a big reason why I got into the business too.
Yeah.
I remember working similar corporate job and just being like rattled at how rigid the schedule was.
Yeah.
Because I feel like, and correct me if I'm wrong, but I feel like working was never something that you weren't afraid of. Like, I'm pretty sure I remember you like having jobs when we were younger.
Yeah.
too,
Oh yeah. Yeah.
Right.
Or multiple jobs.
Right.
At the same time.
Right. And so I feel like if you're willing to take on that flexibility, but also work hard enough when you are working, that you can take that Friday afternoon off. I don't have any client meetings. All right. I'm going to go pick up the kids from school and we're going to hang out all afternoon.
Yeah. Yeah. And being in control of your own income too was important. When you work that corporate job,
you're capped. Yeah.
You're capped by salary bands. You're capped by.
But it's safe,
you
bro.
get your 2% increase every year.
Insurance benefits.
Yeah.
Savings plans.
Whatever.
Yeah.
If it's not worth risking, it's not worth doing.
Gotta risk it to get the biscuit.
Gotta.
I feel like you have always been willing to take risks, calculated albeit, but. And that'll change over time. And we'll get into that when we talk about the investments too. We'll get into that. Okay. Let's jump into the investment segment. What was the first property you bought?
Was our primary house.
Primary house first.
Still the place we're in now.
Yeah.
Yeah.
What'd you guys buy? What'd you guys pay for it?
We paid $330.
Was that a ton of money at the time?
2015. Well, yeah, our down payment was $15,000, which today's standards, I mean, that's like barely a down payment, but at that time it was 5% down. It was every nickel we had. We got married right out of college.
Yeah.
And we weren't established in our career, so it was every nickel, and we bought that house. And
single family detached,
like classic cookie cutter home in North Waterloo.
Yep.
But I mean, everyone thought we were crazy buying a house.
Really?
Young. Yeah.
You remember like specifically friends being like, "Oh my God, that's so crazy."
Yeah. Yeah.
Really? How old were you?
23.
Yep.
24.
Yep.
Yeah. We just that was our goal. We wanted to buy a house. We were getting married. Mm-hmm. We wanted a house by the time we got married, so that we moved out of our parents' house into. Yeah.
Okay. You guys still live there, or did you sell it?
No, still live there.
Okay. What have you done with it?
For 30 days, we didn't move any furniture in it. Mind you, we had no money to buy furniture because we just put it all as a down payment. But we ripped it apart. And we did it ourselves. Pulled out all the carpet, repainted, new trim, new doors.
Were you interested in doing that, or was that like a necessary evil?
It was, we had to.
Okay.
From a financial.
But was this like oh my God, this sucks, I hate it, or?
No, I had fun doing it. Because the first 30 days that we had the house was the 30 days leading up to our wedding. So Kyla was on wedding duty. I was on house duty.
Okay.
So it got me out of the wedding.
That worked out well.
Yeah.
That worked out well.
I'm kind of handy, but handy enough to not have to worry about planning or helping plan a wedding.
Yeah, because really, no offense, but like the decision's already made. It's
Yeah.
whether you're agreeing to it or not.
Yeah. Tell me the date and time and I'll be there.
Yeah, I'll look really good in a tuxedo.
Yeah.
And I'll be there on time.
Right.
Yeah, perfect. Okay, so you guys still own it.
Yep.
Personal situation at the time was right out of college.
Mm-hmm.
Every dime, 5% down.
Every dime.
Fixed it up a little bit yourself.
Yep.
Now, talk about some more recent deals. Talk about you guys have property out east.
We do. So
How did that come to be?
when we bought our house, we knew real estate was going to be our investment vehicle.
And this is like, you're already in mortgages at this time.
Yeah.
Okay.
Yeah.
Okay. Did you do your mortgage on your own house? Can you do that?
No, you can't.
That's what I thought.
Yeah, you have to have somebody else do it. So my mentor, who got me into the business, she did our mortgage for us. Yeah. So real estate was always going to be our goal. That was going to be our retirement fund. That was going to be our investment vehicle. And it's more so of just creating wealth, not working that corporate job, paying into your RSP, paying into your pension, and waiting till you turn 65 and then start living your life. So again, calculated risk, right?
Yeah.
Create your own wealth. So real estate was going to be our vehicle.
Yeah.
We had the goal that by 30, we were going to have at least one rental property.
Yep. Realistic goal.
We missed it by 1 year, but we bought 3 in that 30.
See,
but
but that's how it works, right? It's just like, I think the goal is important, but also just like nothing's ever perfect.
No.
Like,
and you can plan it, like even if you're buying your first home, you can put all the plans in place.
Mm-hmm.
You can adjust for things that pop up.
Kids, market, business.
Yeah.
Right.
Anything. Just the opportunity of the places. Like we were looking for 1 rental property and 3 fell into our lap.
Yeah. So talk to me about how this, and I love it because like I've used that term too. Like this deal just fell into our lap. And like, I think people that watch real estate content or, follow people or talk to investors, just, they're looking for the perfect deal.
Yeah.
And we're getting a lot of that right now from our own investors, is because there's a lot of uncertainty in the real estate market and in the financing side of the market as well.
Yeah.
And so people are trying to operate with that huge margin of safety. I need that home run deal. And they see people like myself or like you be like, oh, the deal just fell into my lap.
Yeah.
Well, how many years were you looking for a deal before that one fell into your lap?
Yeah. That's the thing. Like you don't see all the work that goes into.
You guys were looking at tons of deals all over.
Tons. We worked for months.
Yep.
We talked about it for months.
Yeah.
But I think the number one thing was we had to decide what was important for us in a deal. Is being in the appreciation game of buying in Waterloo. And at the time when we were looking at deals, like values were going up like crazy.
Yeah.
So did we want to be in the appreciation or did we want to be in the cash flow?
Yeah.
So that's when we started looking at Waterloo and London. Waterloo gave us that appreciation game. London was a little bit closer to the cash flow game. So those
London,
were
Ontario,
like,
for the record.
Yes. Because we ended up buying in Stratford.
Yeah.
PEI.
Yeah.
Not Stratford, Ontario.
Nope. So what's the deal in PEI? How'd you guys even find that? Didn't you have like a mutual contact or a client?
I had a mutual contact that's pretty heavily invested out there.
Yeah.
Just like talking to him about like what our goals were, and he's like, take a look. Take a look out there.
Okay.
I'll hook you up with somebody out there. Just look at the deals. Like if cash flow is your game,
take a peek there.
Just take a peek.
Yeah.
So we did, and just searching through realtor.ca like crazy.
Firing off the messages to your realtor in PEI?
Yeah. And I saw this place. It was a townhouse.
Who saw it first? You or Kyla?
I did.
Okay.
Townhouse and unit. And I was like, oh, it's a good price. Like, seems interesting. Kept going. Saw another one in the middle. And I was like, oh, man, that kind of looks like the other end. And keep searching through. And then I saw the other end. So I was like, is this 3? It's a townhouse with a unit in the middle. They call it a triplex.
3? What?
It's
not 4 rows of 4. What the heck?
Yeah, no, it's 3. And they call it a triplex.
Yeah, that weirds me
It's
out. Like
super
semi-detached and duplex are so different.
Semi-detached out there is a duplex, and like our townhouse is
That's considered a triplex?
A triplex.
Yeah.
And if it had 2 in the middle, it would be a fourplex.
Bizarre.
It's weird.
Yeah.
Different province. Different.
So, I'm assuming you guys weren't necessarily looking for a townhouse.
No, we were looking for 1 unit to just get into the market. And I also thought too, like, that's when I started to grow my business, my mortgage side of doing a lot more investor deals.
Ah, okay.
So I wanted to have skin in the game and go through the process, because then it makes it more relatable when you're working with a client, right?
Yeah. Well, I mean, I know I've said this on the last episode and on other like podcasts that I've done, I was shocked at how few real estate agents actually owned property.
Yes.
Blows my mind.
Yeah. How many mortgage
And that's what I was going to ask. How many mortgage agents actually invest in real estate?
Own homes or have anything?
Or don't lend money?
Right.
You're just like, that's your business.
Right. How many financial advisors that, rent and
yeah,
whatever, right?
Yeah.
Like,
not saying that they're bad at their job, but it's
not
just
at
like
all.
there is some credibility behind
there
actually
is.
doing
And
what
I
you
think,
say.
And a big part of my business is being relatable to my clients.
True.
Well, if I haven't put skin in the game and done it myself,
They can feel that.
How can I better serve my clients if I can't even do it?
Yeah. You don't know what you're talking about because you haven't done it.
Right.
Okay. So we found this spot in PI.
So
You guys
found
comfortable going through numbers? How much you guys pay for these?
So each one of them was about $360,000.
Okay. You guys bring 20 down?
Yeah, had to. I think we ended up doing 25 just to make the numbers work a little bit better. Values here were super high.
Mm-hmm.
There was a house a couple doors down that ended up selling for just an insane price. So we said, okay, let's pull the equity out. We thought that price was insane, so we obviously didn't refi up to 80% of that price.
Oh, okay.
We actually scaled it back because I had a number in mind that I wanted that house to sell for. Mm-hmm. And if it sold for that, then our whole plan would work.
Then our refi, because you were going to refi your house.
Yeah, it sold $300,000 more than what that number was. So I was like, okay, our plan is good. Let's protect ourselves in case values did come down.
Yeah.
We only need this. Let's only take this. Let's just get into the game.
Yeah.
So we did that refi. We had the money sitting in the account. We were searching here, searching London, searching PEI at the time. And then these 3 places came up, and we were in Disney. Shout out to Disney. And
while you were doing the deal?
Yeah, that's when we bought them.
That's awesome.
I've never been to PEI ever in my life. And we bought them while we were in Florida, and our walk-through was through FaceTime.
How cool is that?
And it was only of one of the units.
Really?
Yeah.
But good enough deal that you could take the risk.
Good enough that we could take the risk. The numbers made sense. Their vacancy rate out there is like basically 0.
Yeah.
Their rents are really strong out there.
You were saying before we got on, you said it's actually like no rentals out there.
Yeah, there's not.
Yeah.
We post them, and within 30 seconds, we're getting hundreds of Facebook messages from people.
Wow.
So it just it made sense.
All right. Well, Paul's right here. Shout out to Brandon if you guys want to talk about investing in PEI.
Yeah.
You're the only one that I know that actually owns property out there.
Yeah.
That I personally know anyway.
Yeah.
That's wicked.
Yeah. It's for sure. It's got its challenges. Like any investment, any real estate, it's got its challenges. But when rates went up, prices started getting a little dicey in Ontario. They continue to steadily grow.
Yeah.
In PEI. So it was kind of a blessing in disguise now, like Monday morning quarterbacking it, that we diversified and we have real estate here.
But had you not...
But we also have it in another province. So when something bad happens here...
A little bit more isolated. Yeah, that's a benefit for sure. And plus, I think that the debt paydown game is probably a little bit more predictable. Like the debt paydown cash flow game is a little bit more predictable than the appreciation game.
For sure.
I think that there is probably higher maximum returns in the appreciation game versus the cash flow and debt paydown game, but far more risky and less predictable.
For sure. And we needed that stability with running our own business, having kids. Yeah. Like we needed to make, and that's why we chose cash flow over
100%
appreciation, is because
you were willing to take the risk of investing in a market you didn't know that you can't physically be at in exchange for...
We researched it like crazy to make sure we knew what we were getting into.
Mm-hmm. Are you going to do more out there?
No, we're pretty happy with what we have out there.
Yeah. Let it ride for a little bit.
Yeah. And I think there's lots of opportunities here in Ontario. So that will be our next will be to
try and scoop up something here.
Yeah.
Nice. I'm gonna turn that off real quick. Boom. Okay. What's news? Well, so next segment. What have you been following in the news lately? Doesn't necessarily have to be local.
Yep.
Something to do with real estate. What are you tracking? What are you looking at?
So, I mean, you guys talk a lot about the ADUs.
Yep.
Right? It's becoming more popular.
Yep.
But there's not a lot of policies with lenders on it.
Ooh, have you financed any yet?
No, not yet.
No, I've heard lots of problemos for people either acquiring them or trying to refinance and get good values out of them.
Yeah, but with anything in mortgages, there's always exceptions.
True.
Lenders always have exceptions. So just doing my research, like some of the bigger banks they won't include it in the appraisal value, but they are considering it for the rental income.
So we won't consider, correct me if I'm wrong here, they won't consider the value of the structure, but they will take into account the income that it generates, assuming there's a signed lease in place. Would they do market rents?
They would want 3 months of rent deposit. Right as we sit right now, they want to see that it.
Really?
Yeah.
So have you and your team?
There's just not a lot of comparables yet, right? Like especially around here, like they're just getting going.
There's literally been, I want to say, less than a dozen that have sold on market.
Right.
Ever.
Right. So they don't have years of comparable data to put a fair market rent.
Okay, so on that topic, where do you think the financing for ADUs is going to go? If somebody wants to purchase a property that already has an ADU on it, are they going A lender? Are they going B lender?
They can still, A lender's still fine. It's just, it's not going to be included in the appraised value. Just like anything, they do.
So the price you pay may not be the main building price.
Yeah, the main building plus up to 5 acres of land.
Yeah.
They'll sometimes include an out garage, but any other like out living buildings not included.
Interesting. So buyers out there, you haven't had to have anybody close on one.
No.
But to purchase one, we're thinking get that condition in there, shop it to some lenders, figure out.
Yeah.
Right. What's appraisal turnaround time like now? Because I remember during COVID and right before COVID, it was so long.
It's
because lenders were just overwhelmed with like refis and purchases.
Well, with that shift in the market when we did start to see rates go up and prices come down.
Yeah.
Everything needed an appraisal.
Interesting.
Nothing was hitting on automated valuation metrics, and they started to make sure that their risk tolerance was in check still. So everything needed an appraiser. The default insurers, someone buying insured with less than 20% down, they have the ability to ask for appraisal. 9 times out of 10 doesn't happen.
Really?
Last year, near the end of last year, every insured mortgage, it was like, oh, insurer wants to do an appraisal.
Interesting. So, okay, maybe this is a good question for you then. If a buyer out there is looking for a property and they're considering for, like, say, something with an ADU, typical timeline, assuming they've already spoken and met with you.
Yeah.
You've already got a file going for them. You're, hey, Zach, your budget's this amount. But if you're around this, we recommend a condition of finance for this reason, this reason, this reason.
Yeah.
I go find a place and say, I'm going to put an offer on it. Typically, how long are the conditional periods? If they're purchasing like an ADU, to get it appraised, get everything back from the lender being like, hey, we can go this based on the rental income, like assuming all the information is readily available.
Yeah. Like ideally, if we want that appraisal done in that conditional period, like 5 to 7 business days is more ideal. The lender or the appraisers are getting a lot quicker.
Thank God.
Yes, but they're also way more expensive.
Right? I think when I first got the business appraisal, it was like $200 tops.
Yeah, it's like $250 to $350 was like high end. When you got that,
how much are appraisers now?
$600-$700.
Come on.
I've had one up in North Bay, and it was $1,500.
Well, it's because they had to drive from Toronto, probably.
That was a appraiser from that city.
$1,500. What are they appraising for $1,500?
Huntsville's like $900 to $1,000.
What?
Yeah.
For a residential property?
Yep.
That seems insane to me.
Yeah.
Are we in the wrong business?
How
many appraisals could you do in a day? 4?
Well, I've been on property for a couple appraisals, and like they're there for 15 minutes.
Seriously, 15 minutes.
They take pictures of everything, take pictures of the mechanical, and they're like, okay, we'll send you the report in 24 hours.
Yeah. On that note, you just bring up a couple good things. Let's talk appraisals. Yeah. So like when I'm advising clients who are like, hey, we're going in for a refi, like I'm like, talk to your mortgage broker if you have somebody you trust. But if they're working with somebody that they don't necessarily have a relationship with or doesn't have experience in those types of deals, like I'll give them my 2 cents because like I've done lots of appraisals for my own properties.
Right. Yeah.
So if when I'm doing a refi, I'll literally email the appraiser to schedule and confirm the time. They usually call you, be like, hey, I'll come by this time. You're like, great.
Yeah.
I'll send them an email. It's like, hey, here's the property, just so you know. And I'll just give them a point form list of everything I've done to it. And they'll be like, yeah, like sometimes I'll tell them I'm in the business. Sometimes I'll just say, here are the comps.
Yeah.
Like, and the comps of the comparable sales. I'll email them the list of all the homes that are sold closed, sold pending that I think directly relate to it and just leave a little blurb. I don't want to necessarily be overbearing because like they're going to be like, don't tell me how to do my job.
Right.
But I want to make it also be like, hey, I know what I'm talking about. I want to make this as easy as possible.
Right.
Like Do you have recommendations for working with appraisers? Because some people would just be like, just let them in and say nothing.
Yeah, sometimes it depends. Like the big five banks, they want it to be a blind appraisal. So
what is that?
We go onto a system and we say we need an appraisal done at this address. We upload the APS if it's a sit purchase.
Yeah.
Or if it's not, we just say here's the address, here's the contact information, and then the website auto assigns it out to an appraiser.
Yep.
So we have no access. We can't get to those appraisers.
Yeah, you can't as the
Right.
broker, as a mortgage
Right.
broker, right? Which
So-
is probably for the best, because like I'm sure there was probably some collusion.
For sure. And like there's other lenders where they say, okay, here's our list. Here's our approved
Pick.
list. You pick.
Yeah.
So then you can establish relationships with
Yeah.
those appraisers. That's typically the lenders that I prefer to work with.
Yeah.
Again, I like to be in as much of control of the deal for the client as I can.
True.
So if I can pick the appraiser, I have an established relationship with the appraiser, and we say, okay, to make our deal work within reason, like I think our property is worth X.
Yeah.
Here's what we're trying to get to.
Yeah.
If they can't get to there, we're getting a phone call saying, this is what I can get to. And then we have a discussion about it.
Yeah.
Right.
And so are you having that conversation with clients before they're doing like acquisitions and refis? You saying, hey, you know, what's your plan with this property? If you're planning to refinance it in the short or the medium term,
yeah,
like what do you need it to be worth? Why do you need to do it? Like,
I think I probably tell clients more often what the plan is. They have the idea, but in order to deliver and have them execute, a lot of it comes from, here's the plan that I think you should take.
Okay.
Here's option A. If we do it this way, I mean, you've seen what I do for clients, right? Like I try and map out as many possible scenarios for them and guide them on how we can execute each one of those.
Okay.
Very rarely is a client coming and say, okay, here's my plan.
Yeah.
Here's how I want to execute
Love
it.
those
Just do it.
Love those clients.
I do and I don't.
Really?
Yeah.
Sometimes it's just nice to just be a good little soldier and just like do because if they've already done their homework, they know what they need to do, they know what they want to do.
Yeah.
Just to like go out and do it.
For sure. There's definitely a place for that, but they don't do mortgages every day. They're not dealing with the appraisals every day.
So the idea
they
in
might
their
have a
head,
very set mind on how, and maybe that's not how it's done.
Yeah, true.
Because a year ago, 6 months ago, when they bought their last property, yeah, okay, sure, that's how it was done. But our industry changes so quick.
Like I said, that's like, there's two things that I kind of beef with the mortgage industry. Is one, you guys have so little control over client retention, and two, you have so little control over all of the changes the lenders are just making and imposing that you just have to know about.
Right.
Or else you can't properly advise clients.
Exactly.
So it's super hard. Like even somebody comes and does a deal with you 6 months ago, they're like, yeah, we want to go back to the same lender. And you're just like, that promo's gone, or that policy's gone.
The policies change. Rental offsets change.
Best and the worst thing. And just like shameless plug for mortgage brokers out there is just like, look, if you're a buyer and you know exactly what you're doing, you have a great relationship with your A bank and you qualify in that A bank space, okay, they may be able to just give you preferential rates.
No.
Really?
No.
You don't think so?
No.
Really? How come?
You're just a number to the banks.
This is true.
I mean, we both have worked in the banking industry.
Yeah. Unless you're getting like employee discount rates,
for sure,
you can't compete with that.
There's definitely a lot of good bank employees out there who honestly do care.
Yeah.
Especially with like the more mobile mortgage folks, but like their responsibility is to their shareholders of the bank.
This is so true.
Right? So you're subject to whatever that bank is offering.
Yeah.
Okay, maybe you might get a point or two off of your rate.
Yeah.
But you're just another client to them.
And the thing that blows my mind is the level of service. So when we were traveling last year, when interest rates were first starting to come up, I was talking to a guy who owns a bunch of real estate in Illinois. And he was like, yeah, as soon as things started to change up, I got calls from my banks being like, hey, anything you need, if your situation is changing or your business is changing or your lending needs change, let me know, we're here for you.
Yeah.
You know what I got? I got paper mail asking if I wanted to clear my high interest balances with a line of credit.
Right.
I was like, what? I have done millions of dollars with this bank. I have been with them for literally since I was 5.
Yeah.
So they can see like I'm a lifetime client. and they're emailing me or they're paper mailing me. No phone call, no, hey, why don't we come in and take a look at your portfolio? Nothing. But that's why I will say this about mortgage brokers is you will get that call.
Yeah.
Straight up, the level of service, even if the product is relatively similar, the level of service is like night and day.
The amount of people that I get are like, well, I've banked with X bank for 15 years. I'm going to go talk to them because they're going to give me a better rate. Okay. I am not worried when a client tells me I'm going to talk to my bank. Sure, go ahead.
Yeah.
Because I'm going to crush it on service.
Yeah.
And I could probably work with that bank.
Yeah.
And still get you a better rate.
Yeah.
Than what that bank employee is going to get.
100%.
Not to knock banks by any means.
They fit a bill. They fit a mold, right?
100%. They're there to sell you a mortgage at whatever rate that they think that you'll take.
Yeah.
Right? Whereas I can work with that same bank, but I'm on your side. If I can drive that rate down somehow.
Yeah.
If I can look beyond that bank to another financial institution that has a better rate for the same product, same flexibility, same features.
Why wouldn't you?
Why wouldn't you?
Yeah. So before we move on to the last bit of the segment, why don't we walk through kind of like what a typical interaction would be for somebody that you're doing business with for the first time?
Yeah.
Because like I have experience, but for people who have like zero real estate or mortgage experience, they're like, I need to figure out how to buy my first house. Is First Stop you? Is First Stop Financial Advisor? Is like...
So I wish it was the First Stop was me. Because, I mean, if you don't know your numbers, how do you know what you can afford?
If I had a nickel for every time I told clients that.
I find that when somebody wants to buy a house, they go straight to a real estate agent.
Yep.
And they're passionate, and they say, I want to buy a house. And you're like, great, what are you approved for? And they're like, I don't know. And you're like, go figure it out first. You got to know your numbers. And part is, they don't teach us this in school.
Oh, my God.
There's no financial
We're not going to do that
literacy.
on this podcast that much, but it's so true.
That's another one. But there's no financial literacy when it comes to buying a house. How do you go through that process, right? Everything I do is education based. Service first, never sales. That's my motto. So when they come to me, the first interaction is just an introduction call. Like,
who are you? What do you know?
Let
what
me
do you
introduce myself to you.
Yeah, I'm a real person.
Who am I?
Yeah.
Like, I'm on the same level. And if anything, I find a lot of mortgage agents and brokers, they think they're above clients.
It can be a very transactional business.
Right? I'm on the same level. If anything, I'm working for you. I'm a resource to you. You're my boss in this.
I've told clients that before too. It's like, remember, like, you're the ones paying for the house, guys. Yeah. I'm your boss. You're like, if you need something from me, tell me what you need.
Right. So I feel like, it is an introduction call, but at the end of the day, like, I'm interviewing for their business.
Yeah.
And if I can't relate to them or I can't make them feel comfortable in a 30-minute phone call, then the whole transaction beyond that is going to be tough for them.
Yeah.
It's going to be tough for me because they're not going to disclose everything to me, and I'm going to have to find out things in the 11th hour. So if I can't make you feel comfortable in a 30-minute phone call, the chances of us being successful working together aren't very high.
Yeah.
And it's just a time thing. Like, let's save everybody's time here. I'm going to show you how the process works, and we're going to walk through the whole process. I'm going to give you a first-time homebuyer's guide. And I'm going to break it down as simple and as easy as I can so you understand it.
Yeah. Well, that's something that a lot of people that, we've done business with together have appreciated is like, get this nice little table for a few different scenarios that are like in their wheelhouse that they can afford.
That comes after. That's a second interaction.
Yeah.
The first one is just like, let's just generally talk about it.
Yeah.
Let's make you feel comfortable with it. Know what to expect.
Yeah. And then after that, if they're like, yep, we want to do this. All right, then what?
Then perfect. We, like, even in my calls, I say, like, I'm going to send you an email of like, here's all the documents that I'm going to need from you based off of our call for income, down payment, whatever. Take your time. Review it.
Think about it.
Make sure that you are happy with me and you think that I'm going to fight for you.
Yeah.
And then send it.
Yeah. I'm
not going to beat down your door and say, send me your docs, send me your docs, send me your docs. Like, you have to feel comfortable doing it.
And was that like a natural way for you to do business?
Yes, because I hate, like, back in the day, you'd go into Sports Tech, right? You walk in there and they're all over you because they're commission sales.
Yeah.
What do you want to buy? You need help? I hated that.
I just want to look.
The minute I walk into a store and it's all commission based and people are just like trying to get a sale in, I'm out.
Yeah.
See ya. And that's how I've built my business. Is it's not about sales, it's about service. And
it's funny
how
though.
I service people is not through I have great rates and whatever.
Yeah.
It's about educating.
Yeah. Yeah, we've gone a lot. That's our primary route for like cultivating new relationships and like new clients is like, here's what we're about. Here's where we can provide real value.
Right.
Here's what our level of service is. If that's a good fit for you, we want to work together.
Right.
If not, all right, there's lots of other people out there that I'm sure would be willing to do something else for you if that's what you need.
Right.
So, all right, we're doing first initial call. We're doing, if we're going on next steps, we're getting the document collection going.
Yeah.
Document collection, never ending battle.
I've gotten good over the years. My email templates that I send to clients, they're pretty dialed in.
Yeah.
The odd time I have to go back, but they're pretty clear and concise.
Yep.
They've got instructions like how to navigate my CRA, how to navigate your bank account, your online banking.
Yeah.
To get me the stuff that I need. So it's not this constant battle of you send me a screenshot and no, I need a PDF and whatever. Like it's all
there.
It's dialed in.
Yeah. And then a couple days for doc review, figure out if you need any additional information. Then we can actually get to like a formal, here's some options.
Here's our scenarios. And in mortgages, like there's not just one answer.
Ain't that the truth?
There's multiple answers. There's multiple lenders. They look at deals so differently.
Yeah.
So being able to map out and not overwhelm, the last thing I want to do is overwhelm a client.
Yeah.
But giving them enough options of here's scenario A, B, and C, and here's all the things that we can do to leverage different lenders to get you a higher approval.
Yeah, higher approval, better rate, better terms, whatever it might be.
Exactly.
And it's also going to depend on the client situation. But if you didn't have the intro call, you don't know their situation, you don't know what they're like, then it's hard for you to advise. Yeah, right.
I need to understand them. Like, what are their long-term goals? Like, do they want to be in real estate? Do they not? Like, what's important to you?
Yeah. And you know what? Those types of people, they will come back to you because the relationship and the service is more important than just get me to the straightest line as quickly as possible.
Exactly.
Right? Like, give me your documents and we'll get you a mortgage before you leave the bank. Okay, that's fine, but you're getting absolutely zero service and zero actual advice. Right. So if you just want transactions, go there.
Yeah. And that's the other thing too, is like this misconception of a pre-approval. Well, I got pre-approved by my bank. No, you didn't. You might have a rate hold, but you get pre-qualified.
Yes. Based on the income you verbally tell me, here's what you can afford.
And 9 times out of 10, I find banks don't even collect documents to validate it. Most people don't even know how much they're paid, how they're paid, or when they're paid.
Well, do you even remember getting your first credit card? They just ask you how much you make?
Yeah.
I remember they didn't even ask me. Like I was like,
I used to sell credit cards in the branch to students coming in.
Yeah.
They don't have any income.
I know you don't make any money. They're telling me you're making 10 grand a month. You're like, okay.
Yeah, perfect. Send it through. Approved.
Yeah. It's crazy.
No problem. And
totally different ballgame.
Totally. And you're going to get into issues with that once you've actually got a purchase, agreement to purchase and sale. Maybe you're unconditional, and then you go back to that bank employee and like, okay, here's my pay stubs, and then you start finding out, oh, you're not actually paid that much. You don't make that much. People don't know.
No, people don't know, and it's scary when you don't know what you don't know.
Yeah,
it's just then people just get stressed and anxious. Yeah. Okay, so let's wrap up this segment. For people that want, for buyers, let's say, because buyers have been just getting their teeth kicked in pretty much ever since you've been in the business.
Yes.
What advice, like one piece of advice we're giving to buyers right now?
My biggest thing is put your expectations in check. And it's not to be mean or rude about it, but the starter home isn't that detached cookie cutter single car.
You did yours 7 years ago, 8 years ago, and
different market.
Scraped by every dime you had, and even then
market.
It seemed crazy.
Right. Like if you're a young couple or a single individual, professional, and you want to buy your first place, look at a condo. Just consider it.
Yeah. Consider something that's affordable.
It's a stepping stone. You're not going to be there forever.
Yeah.
If you want to be in the real estate game, condos make great rental properties.
Anything can work, man. Anything can work. It depends on the person, depends on the situation.
Just get in the market.
Yeah.
Get some skin in the game. Get like the days of save for a 20% down payment. Don't.
Yeah.
The minute you get that minimum down payment to something that you can see yourself living in with reasonable expectations, buy. I
don't think that's necessarily terrible advice.
Get in.
Obviously, this isn't financial advice. This isn't.
Well, I can give that.
I can't. All right. So and then I kind of want to flip it the other way. What about somebody who would be thinking about, maybe I do want to get into the mortgage game. Maybe I do want to get into that business. I mean, you have a lot. I feel like you've gotten a lot of experience in your first 5, 6, 7 years.
Yeah.
in a lot of different spots, but like, what's one piece of advice you give somebody that's considering getting into the mortgage business?
I think getting into it for the right reasons is important.
Oh, that was deep.
Yeah, I think, well, I've started mentoring agents. I've started bringing agents on under me. And if you're not in this business to help people buy their first home or help build their real estate portfolio from a service education side, and you're in it for, I just want to make money, because traditionally people in the real estate industry make decent money. Yeah. You have to have your right. You have to have a right reason for being in here.
Yeah. I found that it can be a crazy business, and it can be very easy to burn out. Yeah. If what you're doing doesn't make sense for why you want to do it. Right. Like, if you're in here just to make money, you're going to run into some serious burnout, because you're going to work with a bunch of people that don't align with you and your business and your philosophy.
You'll never build a strong foundation of a database. You'll never build a strong relationship with your clients. Yeah. You're just going to be in the hit it and quit it game. Yeah. Transactional based, do a deal, move on to
and
the
next. And if you hate people, that may work out great for you.
Maybe.
I don't know.
Maybe.
I don't hate people, though. I don't get
But
people
you're not
like
going to get very good Google reviews.
And people are just going to come back to you.
Yeah. Yeah. If I can build a long-lasting relationship with a client,
it's actually fun too. Like, oh my God, you actually like people and want to work with them again?
I stay in contact with a lot of clients. Yeah. Even after for sure, like, we do check-ins and stuff like that. But if they have a big life event, they have a kid or whatever, like, you stay in contact, because it can be a long time that you're talking to people, and you develop relationships with those people.
It's true. Okay. That was actually pretty good.
Thank you.
I knew you had a big heart, because we've spent a lot of time together for a long time, but it's good to see.
I think it changes when you have kids.
Yeah.
It changes. You're living that.
I am. I'm going to be so soft on my kids. It's going to be brutal. Yeah. Before we had kids, I was like, I'm going to rule this household with an iron fist. Yep. And now it's just like, Christ, whatever makes them smile. Yep. Sucks. Anyway. All right, let's bring this home. We're going to give them the goods. Yep. Do you have a gift for me? Do you have a goodie for me? Do you have something that the people could really use or learn from?
I think it's just getting hooked up with a mortgage broker. Like, don't just rely on your bank. Talk to a mortgage broker, a mortgage agent, whether it's me or anybody else. Have somebody who can give you advice and be in your corner. Yep. Not the lending institution's corner.
Do you advise people talk to multiple?
If you want, like, it's important to have the right fit. Yeah. And feel comfortable. So if somebody says to me, I'm talking to other people, cool. Yeah. If 9 times out of 10, they're going to come back to me. Yeah. Because I can relate to my clients. I bought a house. I have a young family. I'm professional.
I have investments.
Like, I'm a pretty relatable person, and I'm not stuffy. Like, I will tell you like it is. I'll give you I'm not going to change my language and be all prim and proper. Yeah. This is me. Yeah. If you like that and you want that honest service and somebody who's going to battle for you.
Straight up. Somebody's doing deals at Disneyland with the family.
Right.
Like, commitment.
And whether it's me or somebody else, like, have a broker. A broker is there to, act on your behalf and find you the best deal. So why wouldn't you have somebody do that shopping and that hard work for you?
Straight up. Free value. Yeah. And may actually set you up for success.
Huge.
And may actually get along with them.
Huge.
Excellent. Yeah. Great way to bring it home.
Yeah. Thanks for having me.
Really good to see you. Really good to see you. Alrighty, guys. Thanks for tuning in to the PBRE show. Thanks for Brandon Haskins for coming on into the studio today. If you guys have questions, concerns about mortgage financing or just real estate or getting into the mortgage business, Brandon is an open book. All his contact information is going to be down in the description. And we'd love to hear from you. If you have questions for him, drop us in the comments or reach out direct. Thanks so much for tuning in.
Thank you.